Hey traders, this is Ron Haight. Happy Sunday. Hope you guys are having a fantastic weekend. As always, everything in this presentation is for educational purposes only. We'll kick off here with a daily chart of the S&P 500 ETF, the spiders. We're using Thinkorswim, and this is a daily chart. We closed higher on the SPY every day all week. So we're within about $5 or 50 S&P points of the all-time high. The bulls have the edge here on the daily chart. You don't need me to tell you that because we just keep pushing higher. I do get questions on, when will this market correct? Well, your guess is as good as mine. We just have to wait for the selling pressure to come in. I'm going to go back to the same two things I tell you what to watch for. It's going to be an increase in volume and a break of the orange line. Now, if I zoom in here, that orange line is the 50-day SMA, or it's an MA. It's a simple moving average. That is the institutional line, if you will. We're above it, we're bullish, we're below it, we're bearish. If we cross below it and close below it and volume were to pick up, that is your big fat red flag, the sirens going off, and be prepared. We might start getting a bigger sell-off at that point. But until then, bulls have the edge. A yellow flag would be a close below something like the red line, the 20-day EMA, the exponential moving average. So that's yellow flag, there is red flag territory. If I look at a weekly chart of the S&P, now every candle is 1 week, look where we are. We're almost there. We are within, like I said, it could be Monday, Tuesday, how these up days are going, and we might hit it. So bulls definitely have the edge on the dailies and the weeklies. If I switch to the Dow, we'll go with a weekly here. Now, on a weekly basis, the Dow just went to new highs. It's breaking out. So there's an unfilled gap up here. That would be the target. Right now, we closed at 274. That's only about 2,000 Dow points or $20 on the diamond. So weeklies, bullish. If I show you the dailies, guess what? We're challenging that little hump right there, that last swing high from June. This also looks bullish in the daily chart. Dow was up all week in the dead of summer. If we take a look at the Qs, QQQ, all-time highs. We did go down on Friday. It was the one index that finished in the red of the big three. But even with that, what was it, a 1% down move? There's no technical damage done here. Same thing. Red gives you a close below the red line, gives you a yellow flag. Orange, that's the red flag. If we take a look at something like the Russell's now starting to break out. It on Wednesday and then Friday, we took out these highs. Its target now is going to be up there at 167 or so. That's $10 on the IWM. That's not bad for an upside target. What would we watch for a rollover? Look at the orange here on the Russell. Once we got above it, we never went back below it on a closing basis. We got close to it here again. That's what we're going to watch for. So it's pretty straightforward. Now, if we move on to gold and silver, gold's at all-time highs. But what happened on Friday with that pickup in volume, this is looking like a U-turn. We don't have an island reversal. That is not it. But this does have the makings, the feelings that we might have finally priced in some of the, world's going to end, let's go buy gold. Gold doesn't pay a dividend. Gold doesn't do anything. It's just a fear trade, if you will. Now, the government's printing tons of money. I am long-term bullish on gold and silver. 10,000 an ounce possibly on gold. I have no idea. It's a guess, but it's way higher than it is today would be my estimates. But what does that mean over the short term? Now that we're getting closer and closer to Q3, gold often puts tops in. And then we start drifting lower. Not that we have to crash, but we drift lower into year end before the seasonality kicks in January. Just be careful. Right now, the 20-day EMA is all the way down at 181. We closed at 190. That's $9. That's huge. So who says gold's going to go from here and then say, you know what, we'll just get below that red line a little bit so folks can try to get out. We could easily go from here to here in 2 or 3 days if things get ugly, just like you saw when the market was selling off. We can make big chunks of yardage to the downside. So right now, gold's still bullish. If I bring in on the daily chart, if I bring in a weekly chart, very bullish. There's nothing really wrong with it other than it's a little overbought. Let's go back to the dailies. Let's bring in silver. Silver's been playing a bit of catch up. This is an explosion. We took out almost a year of consolidation. And once that last high fell, look at that. Just look at that. Right around 18, we went from 18 to 26, pretty straight up. It just got into the stratosphere. Now, with Friday's down move of 2.5+%, there's no major technical damage done yet. This is also still bullish. But again, silver also has trouble pretty much between now and year end. How about bonds? How are they looking? We haven't looked at bonds in a while. I think bonds are going to be one of the things that get hit as well. I've been saying that. They did rally out of the January When they broke out in January, they've gone up. But with the government just handing out free money like it's candy, you know, who really wants to hold something like a TLT? But for now, it's bullish. And remember, just because you have an opinion or a theory on something, you can be dead wrong for a long time, and you can easily run out of money because you're going to say, well, eventually, real estate's going to crash, or bonds are going to crash, whatever it might be, gold's going to crash, whatever that opinion is. But until we start breaking below moving averages, man, this thing can just keep going and going until you're out of money. And then finally, of course, that's when it rolls over and goes down. So for me, before I would consider even something bearish on TLT, first get below the red, but I really want to see it get below the orange. That institutional line is going to get some attention eventually when we close below it. All right, how about Apple? Apple was down 2.5% on Friday. Big whoop-de-doo. It's still up 440 bucks. It finished at 444.45. Same thing like I tell you guys in every video. First sign of trouble, red. Second sign of trouble, orange. Orange is the 50-day. Now, Apple, from a seasonality perspective, keep in mind, once we get into the end of this month, there's a usual dip into that conference. That's one of the few times of the entire year Apple actually trades lower on a majority of the timeline, going back from when it first started trading. So it's had a really nice run. It's going to have a 4-for-1 stock split at the end of the month. Just beware. Maybe you want to bring something in like an 8-day moving average and keep it on a short leash. And if we get below that, for example, maybe that's where some short-term profits could be considered to be taken, of course, in a paper trading account. Let's go look at Google. Google's trading a little down from its earnings report. You can see here, we did have a little bit of a push up in front of earnings. Post earnings, we're just bouncing along the 50-day. Google looks tired. Now, the last time it broke the 50-day was back here, big volume. That was a huge red flag, but there was no follow through. So if I wanted to get bearish on Google back on June 26th, the moment it got back above the 50-day, that was a warning. Okay, bearish trade might be exited. And then you get back above the red, there's nothing left. Now the chart has just gone bullish again. So now here we sit again. If I zoom in closer, we bounced, we bounced, we bounced, we bounced. We have, what, 5 straight days of bouncing. We close below it. If volume picks up, that would be a bad sign, and Google would go bearish on the daily chart. How about Amazon? I saw that Bezos apparently sold some shares, but it was nothing to his vast fortune. This thing is still going sideways. Note, even though we had a really good week in the markets, Amazon did not break out to new highs. It is getting caught up there for what it's worth, 32.45-ish, plus or minus a couple bucks. We break out of that, close near the highs of the day. If volume picks up, that's going to be an incredibly powerful technical breakout. Right now, it's just biding its time. You can look at this 2 ways based on technical analysis. One, it's getting tired, looks like it's going to roll over, right? That could be one. Or you would say, well, look what the dang thing just did. It went from 1,600 to 3,200. It doubled in value in a couple months. Doesn't it need a bit of a break? And this is just a pause before the next leg. That's what I mean. It could go either way. Watch that 50-day in orange. You even set alerts for it. How about Netflix? Netflix was at 3, almost got to 6. It too almost doubled. If we zoom in here, this is a big reversal here. Then we had earnings, and now it's drifting lower and it's chopping. There is a bit of a potential head and shoulders here, head up here, maybe left shoulder here, right shoulder here. It's a little crooked. But really for me, even if we were to put a neckline in here, it's really about the 50-day. We have not convincingly closed below the 50-day for 2 days since it got back above it on March 26th. If I zoom in here, once we got back above, back test for 4 days, back test here, on it here. Now, on June 12th, it did close below it, 0 follow through, and there was not a big pickup in volume. So what would make me think that Netflix might be rolling over this time? A close below the 50-day, hopefully at the lows of the day, and then the spike in volume. That tells me the sellers are finally doing some serious profit taking on Netflix. We take a look at Tesla. I don't trade Tesla. I mean, I always could, but I don't. Right now, Tesla's just doing a bull flag, and the question I received was, how could I potentially trade Tesla right now? Well, number one, for me, this thing moves around so much. It's what, tripled or something since the end of March, beginning of April. It's insane. I could still trade Tesla even though I may not like it, but I would use a smaller size. So instead of trading 1,000 shares, I could trade 200, right, as an example. instead of trading 10 long calls or long puts, I could do 2 or 3. That's one way I could consider to hedge risk in a way by simply putting less risk capital in the trade. In terms of potential trading ideas, something to consider, look at the red line. Let's zoom out of this a little bit and get back over here. Once we got above the red line, we have not closed below it since, holy crap, literally April 7th. April, May, June, July, August, 5 months, and this thing can't close below the red line. Talk about an easy trade. Under 600 to 1700. Now it's at what, 1448. We get below it. That's the first sign that this stock is having trouble. The next support level, you guessed it, 50-day. We get below there, it's flat out technically bearish. Now, a couple other individual stocks I had some questions on. Harley Davidson, with folks riding in the summer, trying to get out of the city into the country. What I find very interesting here on Harley Davidson is the orange line. If we go back into January, pretty much end of December, notice what happened here on the daily chart. Once Harley Davidson got below the orange line, that is an institutional line. Look what happened. Started drifting lower, then came the pandemic. It goes from 35 to 14. Okay, we then rally. It gets above it, but then right back below it. This was a little bit of a chop, right? So this isn't perfect, but there was a lot of interaction back and forth, back and forth. It was a bit of an inflection point. Then we get back above it in May, and it's been golden. Support for what, 6 days? Support here again, 6 days. So keep an eye on Harley Davidson. We close below that orange line, flat out sell signal. And if I look really closely, this is a bit of a mini bear flag. Flagpole, flag. How about CMG? Chipotle, got asked about this one. Chipotle seems to have lost its mind. It goes in the Tesla bucket, where it goes from 900 pre-pandemic to 415 at the low, and now we're at 1193. It's on sale. What would I watch for? Orange line. Now here's the thing, 1193, 1088, that's over $1,000, almost $1,100. I'm sorry, 1100. $111 difference, almost 10% drop before it even gets below the orange. But who says, like over here, here's Chipotle when the pandemic started. One day it closed below the orange at I'm just going to round this off, 860. Then we're at 845, and then boom, we're at 750, where it drops 80, 90 bucks. That could easily happen. We could slowly drift lower, and then you get this huge gap. So just keep an eye on it. That's the line to draw bullish, bearish from an institutional basis. But it always could get far below that before there would be an opportunity to exit. Here's Etsy, another one I got asked about. Low was $29.95. Now it's at $138.95. Massive, massive rally. This one is not paying attention to the red the best. So what could I do? Number one, I could start using different moving averages. Not every stock is going to adhere to the 20-day EMA. It depends what those traders following this stock are using. Maybe I want to bring in like a 25-day, a 15-day, a 30-day, whatever it might be. But you know what it has paid attention to? It's never gotten near the orange. Guess what? If it gets below the orange, incredibly noteworthy on this stock. Super important, massive red flag. That's right now about 186. And then Z for Zillow. People are leaving the city, running for the country with all this nonsense going on. I'll leave it at that. But there's a high wave doji right now on Friday. 85.10 was the high, closed at 79. You can see the company had earnings here. So this is an earnings reaction. Once we got above the 50-day, we've never closed below it. Therefore, the stop on Zillow from a bullish bearish perspective, maybe if I was swing trading stocks, it's the orange line. We get below there, you've been given the red flag. It's worked really, really well ever since pre-pandemic and now post-pandemic. Unfortunately, it's what, $17? That's a lot of, 20% below where it was now. That's assuming it would just get a little below and give us an opportunity to get out if we wanted to. We don't know that. It could easily go down here. You get the idea. But yes, right now it is very, very bullish, but orange line is what I would consider using. So that is it. For videos this week, it will depend if the market is going nuts or not. If it is another yawner where all we do is tack on a couple bucks on the S&P every single day, there may not be a video all week. Otherwise, you could expect a video maybe midweek, Wednesday, Thursday, worst case. But if it's just dead flat, I'll see you Sunday. It's just the summer doldrums. It's just a melt up right now. So I wish you guys a fantastic week ahead, and I look forward to seeing you in the next video. Take care.